It should be action stations for auctioneers and real estate agents, with most states now given the go-ahead for on-site auctions and open houses. Clearance rates have picked up from their near zeros, but lifting auction bans might not be enough to help a market that's travelling rapidly downhill.
We're likely to see a 10 or 20% reduction in terms of property values.
Rob Klaric is an auctioneer based in Sydney, and he's noticed a big pullback in house prices.
Virtually across the board, we're seeing around a 10% correction to our market already in the last 6-week period. And that's simply that the market needs to meet where the buyer activity is.
The coronavirus crisis has taken a massive hit to employment and incomes, and sellers in overinflated markets are facing a brutal reality check.
The negotiations have become certainly a big difference between the asking price and what they're actually purchasing the property for.
We are very much aware of the real estate industry advising their vendors that the prices achieved in February and January are no longer achievable now.
Louis Christopher, CEO of SQM Research, says potential sellers are spooked by current market conditions and buyers are holding out to try and cut a better deal down the track.
Very few new sales occurring, though the stock that is in the market is struggling to sell. So we're seeing days on market starting to increase for existing stock.
From a buyer's perspective, they're thinking, well, why should I buy now when potentially I'll be able to get the same product a lot cheaper within the next 3, 6 to 12 months.
Sellers are sweating bullets with listings drying up in blue-chip suburbs.
What I call recession-proof suburbs, especially in Sydney, where Manly, Mossman, Bondi, Hunters Hill, the actual listings are actually a lot lower than they've ever been before. So people that don't need to sell are simply not selling.
For prospective buyers, the word around is that it's getting tougher to get a loan, with the banks tightening their belts in response to the crisis.
I'm hearing anecdotal reports of the banks cutting new lending.
Everyone said to me the banks have been really cautious. So you need to have strong financials, you need to have strong employment history to get the funding. If there's any grey area, the banks don't have an appetite for lending at all.
It may seem strange, but Louis Christopher says that if the money for some owners has run out, you might see a pickup in panic selling.
We know that the banks have placed a moratorium on forced mortgage repayments. That moratorium was meant to last 6 months. It'll be very interesting to see where we're at when we get to August. Will the banks roll over that moratorium, or will they start calling in loans?
In the outer parts of Sydney, we're seeing an increased activity where there are people that need to sell, so their properties are coming on the market. We're going to see a lot more distressed sales over the next 3 to 6 months.
It's a similar situation for investors, with April vacancy rates shooting through the roof. Rents are also sliding, with Sydney prices down 8% in 12 months.
These are very tough days for rental property investors. We're getting zero net migration. So we're looking at a major surplus of stock. On top of that, because of the short-term arrivals being zilch, it means a whole bunch of Airbnb properties have zero tenants in them right now. And so those property owners are looking to move those Airbnb properties into the long-term leasing market, creating an additional oversupply.
From what we know, property prices are clearly in a major correction. But Rob Klaric says property punters might not be seeing the full picture, and in fact, the situation might be far more dire.
The agents are actually withholding the information. They're not actually ringing through the result. The reason for that is that the agents are getting a lot less than what they anticipated. They don't want to let the market know that the prices that are being achieved is a lot less, and they don't want to spook a market. The agents are busy taking the water out of the boat at the moment. We need to actually monitor what is occurring, because at the moment the market's slowly sinking and we need to know exactly how much water the market's taking. And at the moment that the agents are certainly withholding that information.
As the prophet of Omaha, Warren Buffett, says, only as the tide goes out do you discover who's been swimming naked. Steph Nash, Sky News.